welcome to this edition of Energy Frontiers, and we say thank you to the African Energy Chamber for the support of the show. I am Justina Okechukwu. As always, let's get started with some energy news from here in Africa and around the world. South Africa's electricity minister, Julien Ramakopa, says the country is expected to seal a deal with China in the coming week, which will help solar power installers to secure access to panels for projects needed to tackle the country's energy crisis. The National Oil Corporation of Libya reports that crude oil production as at Wednesday, August 16th, amounted to 1.203 million barrels per day, with condensate production reaching 50,000 barrels per day, while total domestic consumption of natural gas was 1.19 billion cubic feet during the period. Carlyle Group, a global investment firm, has agreed to sell its Gabon-focused upstream oil exploration and production company, Assala Energy, to French producer Morel and Prom for $730 million. The deal is expected to close between the fourth quarter of 2023 and the first quarter of 2024 following regulatory approvals. Africa Oil Corp, a Canadian oil and gas exploration company, reported a net income of $128.8 million for the first half of 2023 and announced a 20-year renewal of its OML 130 license in Nigeria. The Nigerian National Petroleum Company has secured a $3 billion crude oil repayment loan from the African Export-Import Bank to support the government's reforms to stabilize the exchange rate markets. A recent study by Big Four firm Deloitte says that by 2050, North Africa could emerge as a dominant exporter of green hydrogen with a projected annual export value of $110 billion. The report further placed Egypt and Morocco as potential world leaders in the green hydrogen revolution. Now, global energy research and consultancy firm Wood Mackenzie says global offshore wind supply chain will require $27 billion of secured investment by 2026 if it is to meet a five-fold growth in annual installations by 2030. And that was a snapshot of your energy news headlines. When we return, we'll take a look at how the global oil markets performed during the week. This is Energy Frontiers. Now, oil prices appeared ready to break a 7-week streak of gains on Friday as worries about China's slowing economic growth and the potential for increased U.S. interest rates outweighed any signs of tightening oil supply. International benchmark Brent crude was up 0.1% at $84.12 a barrel, with U.S. West Texas Intermediate crude rising 0.3% to $80.61 a barrel. However, earlier in the week, prices fell more than 1.5% after concerns over China's economic put pressure on crude futures. Julien Mathonniere is an oil markets economist at Energy Intelligence, and he tells me more about this in this interview chat.
Now, Julien, at first we saw that steep drop in oil prices from Monday till Wednesday, but on Thursday through till Friday, oil prices snapped back up. What are your thoughts on the volatility we saw in the oil market this week?
Well, I'd say there are two interesting things. One is that this price seems to have found an anchor at around $85 per barrel. So yes, it's going up and down, but it stayed very much, around the sort of mid 80 level. And the second thing is that if you look at the derivative market, the paper market, the time spread on the Brent futures contract is around 40 cents, more or less, also going up and down, but, staying around 40 cents. And it tells me And traders will confirm that this market is roughly in balance. So, in a nutshell, oil prices have finally broken out of the slump from the last few months with both the demand, the macro sentiment, and supply, OPEC plus cuts, helping to buoy this market. But while we are back at the higher end of the price range that we've seen in the last 6 months, we also see limits to a major price breakout. Why? One, because Brent is now trading October, which means that the current price already reflects the fourth quarter demand. Two, because, deeper cuts from Saudi Arabia and perhaps more importantly, Russian exports finally rolling over a bit in July mean that OPEC has more spare capacity and that it can use that later in the year if it's needed. And even if it doesn't, and that's my third point, most demand can now be filled by non-OPEC supply. And we still see persistent macroeconomic risk. China economy remains a mixed bag going into 2024, which means that, demand will not exceed 1 million barrels per day in 2024. So limited price upside, more range-bound prices, and probably a bit less volatility.
I know China introduced some measures to shore up its economy during the week. So what's the trajectory for oil in the coming week based on this weak economic data we saw coming from China?
So the Chinese economy is central into the demand debate because China is supposed to deliver half of the 2 million barrels per day of demand growth that we see in 2023. And yes, the country consumer are driving and flying more since the end of the COVID-19 restriction, but the industry sputters. So the Chinese government is sort of contemplating some form of stimulus now. I mean, it's very much into the air. China's industrial activity is not looking great. If you look at producer prices, they have been falling for 10 consecutive months in a row. And the problem is that both consumer and producer prices have been contracting this time. So, China needs some kind of stimulus and stimulus on demand. A lot of China's demand so far has been precautionary oil filling storage rather than, growth-induced consumption fueling a thriving economy. And it's unclear at this point how much more crude oil China can continue to import if prices stay high or if the price continue to rise. But we expect China to slow down its crude import, which is why, that stimulus, action from Chinese central bank and government would be important.
Are we looking at $90 in the coming weeks?
We're probably looking at the same range. I don't think anything below $90 will be possible. You've got too much pressure from the spare capacity, as I said, from the macro environment. So 90 will be the peak.
In the meantime, Namibia's Minister of Mines and Energy, Tom Alwendo, has cautioned against viewing recent oil and gas discoveries as an automatic solution to socio-economic challenges in the southern African nation. Speaking during his opening remark at the Namibia Oil and Gas Conference 2023, which kicked off on Wednesday in Windhoek, the minister called for careful management of expectations and noted the potential for uncertainties and complexities in the development of the oil sector.
Indeed, the discoveries hold a great potential to improve our socio-economic challenges. However, the development of the sector is inherently associated with uncertainties and complexities. One can think of uncertainties associated with issues such as of that quantity, like it was said, we are doing a appraisal to determine that quantity, the quality of the oil that has been discovered, what will be the production rate of the oil, what will be the price. And some of these uncertainties can actually remain with the production or with the sector during the lifetime of the oil production project. And therefore, we need to be aware of that. There is those uncertainties and complexities. It is therefore important that we manage our expectations and aspirations for what this sector can actually mean to us. We also need to be cognizant of the socio-political and economic complexities that can arise because of the oil sector. The second issue is that the governance of the oil and gas sector is imperative to ensure that potential economic benefits are shared equally and fairly. Governance failure can have far-reaching implications for our economy, social development, and probably also political development. Good governance of the sector requires all of us to play our respective roles. From the government perspective, good governance entails that we should have clear national goals. We should ensure sustainable exploitation. We have transparent processes, and we ensure accountability in decision-making and performance. However, apart from good governance processes, to effectively manage our oil and gas resources, it is also imperative that the custodian of these resources possess the required skill, and above all, that they must have high level of integrity. This is essential to reduce corruption in all its manifestation. It is also important, ladies and gentlemen, that the investing companies, the international oil companies that we have got, our investors, play their role in such a manner that the economic benefits to be derived from the sector are shared fairly and equitably. In other words, the investing company must earn their license to operate. Our oil discoveries are made at the time when the energy transition discussion has reached its crescendo. We have observed cases where countries with fossil fuel resources, especially developing countries like ours, where we are being discouraged to not leverage our fossil fuel energy resources, and obviously in the name of climate change. We are being urged to, as soon as possible, switch to clean, renewable energy sources such as solar and wind, which luckily we have as Namibia as well. Now, to be clear, I am not taking any issue with the fact that we are severely affected by the effects of climate change, because we are. For example, we have seen devastating droughts and floods not only in African countries but elsewhere. Most of us have experienced changed rainfall patterns in the process, negatively impacting global food security. Therefore, climate change is real and it must concern all of us as global citizens. What we, however, find unreasonable is when some countries and some global interest groups demand that the energy transition takes place in a linear fashion, completely disregarding the livelihood of those who might be affected. And this kind of a mindset is so condescending, and it shows really a total lack of concern about the immense socio-economic development challenges faced by developing countries such as ours. We are therefore calling for an energy transition that is just and equitable among nations. However, recognizing the inevitability of the energy transition, we understand and accept that fossil fuel may no longer be a fuel of the future, and that the world is transitioning to renewable energy. It is for this reason that we, together with the international oil companies, together with the investors, need to ensure that our oil sector is being developed with the lowest carbon emission in mind, and we do so from the inception as we start actually to put the plans together. This will be the most effective way to ensure that our oil sector is competitive in the global markets.
Coming up, commodity-driven Africa needs technology for sustainable energy development. But how will the continent acquire the technology it needs to advance sustainably? More on this when we return.
Imagine a future where tomorrow's solutions build a world of opportunities for all, and where human potential is truly realized, where every child has an equal chance in life, no matter where they were born. Imagine the potential of a continent built on low-carbon oil and natural gas and abundant renewable energy. Imagine Mozambique, Angola, Nigeria, Uganda, Senegal, Egypt, Namibia, and Algeria being let free to develop their natural resources without pressure from wealthy countries to leave it in the ground. Imagine an Africa where we cut red tape bureaucracy and provide better fiscal terms so we can compete globally for energy investments. African Energy Week is the African Energy Chamber's annual event held at the Cape Town waterfront, uniting African energy leaders, global investors, and executives from across the public and private sector for 4 days of intense dialogue on the future of the African energy industry. Showcasing the latest technologies and innovations to 5,000 plus registered delegates from over 100 countries and international professionals from across the global energy sector. Be part of the future of the energy industry and join the energy movement by becoming an official sponsor, exhibitor, delegate, or partner. African Energy Week.
Welcome back to the program. Now, technology plays a crucial role in advancing sustainable energy in Africa, particularly in the context of reducing reliance on traditional fossil fuel in a continent that is rich in oil and gas resources. While technological advancements in the energy sector offers numerous benefits to Africa, there are also several concerns and challenges that need to be addressed. Chinnan Dikwal is the Vice Chair of the African Energy Council, so I sat down to harvest his thoughts about what the challenges are in deploying new technologies for sustainable energy.
Now, what are the challenges that African countries face in terms of deploying new technologies for sustainable energy?
That's a great question, Justina. But I think I would rephrase that slightly differently. Actually, I think I'd look at it a bit differently. The first thing, I think, in terms of the challenges of deploying that is that of even awareness. The Africa space is still quite low in terms of what's happening globally in the energy sphere. So when you look at energy transition, with all due respect and saying it very bluntly, we've still got our heads up in the sand like an ostrich. We're not quite aware of what's happening in that space, the pace at which things are moving, and how other economies and markets are transforming. Traditionally, Africa has been a basket of resources. This is what we have played in the global stage. That's the role we have been apportioned on the global stage. Okay. Now, if we are resource makers on the global stage, then we are dependent on the markets and what the markets are doing. If we take energy, crude oil, gas, and all of that at the moment, most of the markets we're serving today are transforming. Most of those markets are transforming away from the oil and gas that we sell. So ultimately, that means there's a big risk to us African nations to start to think very cleverly around, one, what is happening? What's the pace of this change that's happening? Which of our volumes, which of our oil volumes, our gas volumes are at risk? Ultimately, how can we pivot to something to make sure that we continue to hold our market supply position? So these are some of the key things I think that are happening. One is a thing of awareness. I think before technology deployment, which is your question, asking for the barriers, I think it's a thing of awareness. What is happening? How much of that awareness is happening in Africa? And, I say this very respectfully, a lot of the policymakers and all of that, we still think, we still have that whole mindset of a world that's still very much fixed on oil and gas. The reality of it is we're in a transitioning world. Much as we hate to hear it, it's the truth. I'll give you several examples. If you go back to 2019, global daily crude oil consumption in 2019-2020 was about 100 million barrels per day. 100 million barrels per day, global consumption of crude oil. Today, Most of the EU have a target of 2030, 2035 to transition, not sell any more petrol or diesel vehicles. France certainly have that. The UK certainly have. Most of the countries in Europe have that. The US is not far behind, thinking about the same. China is electrifying in a very, very big way. India has started to pick up. All of these things I'm saying is, if you hear my rhetoric, these are where most of our crude oil ends up. These markets, most of transportation is going to become electric. So if you think about 100 million barrels per day, like I'm saying, out of that 100 million barrels, there's going to be a haircut in there, which means that some of the volumes are going to be at risk. Now, who's going to be at risk, for those volumes? Most likely it will be African for lots of reasons. Sorry, I took your question to another tangent, but I thought to set the scene that way.
Finally, the African Energy Chamber reveals 3 major partners joining forces for the African Energy Week 2023, Moyes & Co., Envoy and Farm Out Angel. Together, they are launching the African Farm Out Forum, a platform to boost deals in the continent's upstream sector. The forum is set to take place at this year's African Energy Week, which is scheduled for October 16 to 20 in Cape Town, South Africa. You can find all that information you need at www.acweek.com. And that's how we wrap up the show for you this week, and we thank everyone for watching. Remember to follow the program on Frontier Africa Reports website, subscribe to our YouTube, and follow us across all our social media handles as indicated on the screen. I am Justina Okechukwu, and bye for now.